I'm Alex Sifakis, the president of JWB Real Estate Capital. Primarily invest in single-family real estate, although we do a lot of land development, and then we also have a urban revitalization fund where we're doing mixed-use construction in downtown Jacksonville. So we have been in business in Jacksonville for 18 years now, which makes me really old. Started in 2006. So I came to Jacksonville really because my business partner, high school and college buddy and business partner, was living up in Jacksonville. I just graduated from University of Florida, and Jacksonville was a much bigger market than Gainesville, which are two markets that we kind of knew. And so it seemed like a better decision to start a business in Jacksonville, and in my opinion, one of the best places to invest in real estate over the past 18 years. Going through multiple market cycles now from 2006 to 2024, it's crazy at how much capital shifts. And one of the main reasons why we were able to stay in business throughout the original downturn, the run back up, COVID, is because we have access to unconventional capital like DLP. We have private lenders. We did very little with banks. Those are the first to go away when the market hits a speed bump. And then lenders like DLP, which has been a critical component of our capital stack. First time we used DLP as a lender was probably 2016, 2017. At that point, it was actually on single family homes, both on new construction and renovation. So doing like almost fix and flip and new construction loans. And then that morphed in probably 2019, 2020, where we were doing more land loans. DLP was by far the easiest to work with from a land loan perspective. And now we do a little bit of both, much heavier on the land loan side. Development as well, vertical development for multifamily, for new construction. First word that popped into my head when you said, how would you describe DLP, would be versatile. And I think flexible. It's always really easy to work with DLP, in addition to high leverage, not that much higher costs, and also, asset classes that a lot of other lenders won't do. When you go to a bank right now and try to get a land loan, good luck, but DLP is still churning them out. It seems to be an asset class that banks are scared of. And honestly, interest rates have gone up so much that like when you're getting those sort of loans from banks now, they're at 8 or 9% anyways. It doesn't fit within their risk criteria that they're getting from up on high from regulators. And obviously they're gonna be a lot harder to work with as well. So that's really why we gravitate towards DLP. There's an apartment complex that DLP loaned on. They did the land loan and then the vertical construction loan. We've got a 56-unit townhome project where DLP did the land loan and the vertical construction loan. And I think the sophistication of DLP makes them more comfortable in understanding the risk than a bank, because DLP actually does these things on its development side as well. So Le Chateau was a broken condo deal that we purchased. So it was a 131-unit condo complex, originally started as an apartment complex in the 70s. In the early 2000s was converted to condos. And then of course we all know what happened, early 2000s condo deals. One owner ended up with 70 units. And the complex was just, it was not in good shape, super high crime, tons of deferred maintenance. The parking lot looked like bombs had gone off and it just craters everywhere. And so we bought those 70 units with a loan from DLP, and then bought another 20 units from another owner, bought another 10 units from another owner, and then started picking off the other units one by one, and ended up buying all 131 units in this complex with primarily loans from DLP. And now we are going to be basically dissolving the condo and turning it into an apartment complex. And DLP not only gave us the acquisitions capital, but capital to renovate the existing units and capital to do community deferred maintenance like roofs and the community areas and the parking lot that were really critical to getting our rents up, re-tenanting the property with great tenants. My team just tells me this great story where they were going around the complex, and a grandmother came out of one of the units and was just like, thank you so much for what you've done in this community. I now feel like it's a safe place for my grandkids to come out and play. And that's the sort of impact that we love to have, and that great partners like DLP let us have. I've always considered DLP a partner. Even when they were just a lender in function, I've always really considered them a partner because of the sophistication of them as a lender, bouncing ideas off of and understanding what they're seeing in the marketplace. It's not just, hey, give me a loan. And it's always been more than that. We're partnered right now on a townhome deal and an apartment deal. And then Gateway Jacks, which is a huge partnership. It's a fund focused on revitalizing downtown Jacksonville. We own about 20 city blocks in downtown. We've got our first phase greenlit by the city. It's a $420 million first phase, 3 high-rises. Over the next 8 years, it'll be about $2 billion in development. DLP committed $200 million in capital to that fund and is our co-GP on the fund now. And it's been a great partnership. And like I said, not only just, hey, it's just money, it's the sophistication and the knowledge that's really helped us deliver a better project to downtown Jackson. At its core, DLP understands real estate development, which makes them easier to work with and makes them better understand the risk or lack of risk in these deals that traditional lenders just cannot wrap their head around, which is why it makes them easier to work with.